Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 2-hour price chart for Meta Platforms Incorporated, stock ticker META. This is the parent company for Facebook, Instagram, WhatsApp. Okay, so if we're looking at this chart, we can currently see that there is a bit of a bounce that's occurring. And if you actually look at the some of the better performing stocks that are seen in the market today, at least as far as the mega cap, larger trading volume stocks, Meta is actually in percentage terms actually having one of the best performances on the day so far. But that said, I don't know how much that's really saying because the broader environment here is very weak. So it's sort of a, in the land of the blind, the one-eyed man is king, is what they say. So, just because, the gains here have been modest. So, it's not really saying much that, the rally in the share price is definitely going to equal a turnaround here. As we can see here, I have redrawn the Fibonacci retracements. This is going to be essential because we are trading in such a volatile trading environment here that we're having to kind of constantly realign how things actually look here. So currently what we can see is that the stock is trying to pressure its 23.6% Fibonacci retracement. We're coming into a little bit of a resistance zone here. That would be this red line here. But this is clearly an improvement from where we were previously. Near-term lows come in at 442.65. This would have posted during the July 25 trading session, and then the highs from today, July 26, come in. This would be 468.19. Would be the current highs here. So, as we can see, this does come into close proximity with the 23.6% Fibonacci retracement. So, it would be encouraging here to see a break above this area because as this occurs, we would be most likely to also break this yellow line here, which is the 20-period exponential moving average. So currently, these are roughly coming into close contact with one another, as we can see. So, an upside break here would be encouraging because at the very least, we would start to target the next Fibonacci zone, which comes in above 480. This would come in at 481.18. And then, in addition to that, we also have this declining, I should say, 50-period exponential moving average. So this would be sort of the next level to watch to the top side. But first, we do need to break above this area. And this will be kind of a critical close here for the week. It does look like the trading volumes themselves have started to diminish a bit. I think the market might be taking a bit of a breather at this point, trying to find the next direction here. But overall, it's not encouraging to see all this sort of negative trading volume activity here. I can kind of point to this better if I zoom out. As we can see here, these red bars in the trading volumes, are substantial. Like we're really not seeing much green here. It's a lot of red. I mean, it's like a sea of red here. So, we really would, most likely what we need to see here is some changes in this part of the chart in order to really start to expect a turnaround here. Although I do expect this near-term break here, if we can get above roughly 467.80, that should take some pressure off of the downside here. and start to allow us to at least drift upward back above 480. But as things currently stand, a lot of this is going to depend on how the other Mag 7 stocks are performing. How is Nvidia performing? How is Apple performing? I just finished the analysis videos for both Apple and Nvidia. I did Microsoft yesterday. I might do another one of those today. But for the most part, those stocks are looking very heavy here. As I said in the beginning of the video, we are seeing a bit more of a bounce in Meta platforms when compared to those other stocks. Um, but as I said, I mean, this really isn't saying much because there's so much selling pressure in the market. It really doesn't take much to outperform at this point. You could have a pretty dismal or boring upward price move and still be outperforming the market at this stage. So a lot of this is really a question of how much of this bounce is really just occurring because Meta itself experienced so many declines. But we have started to see some upside price moving here. One area that I would point to would be this prior low, which came in during the July 17 trading session. This low would have posted at 459.12. This is a level that we've talked about previously. This is an area of support previously, and it was fairly substantial support, as we can see here. There was a fair bounce from this area, and then once you retest a level of support from the downside, it would be expected to work as resistance. But as we can see here, we did overcome this level. We can kind of drill in here and we can see that we did break this level to the top side. And we were able to sort of slightly breach this 23.6% Fibonacci zone. So, there is some slight evidence of turnaround here. As far as the broader market is concerned, and definitely the Mag 7 stocks, this is one of the better performers on a shorter term basis. The real question here is whether or not that's mostly due to the fact that it was one of the largest underperformers during that period. So, these are factors that need to be watched going forward. We're still looking at a red candle here currently. So, despite these moves higher, there is clearly still selling pressure, as I pointed out, these trading volumes here. But if we are able to break above, roughly 467, that could lead to roughly $15 in upside, because the next level of resistance to the top side doesn't come in until we reach above 480. And then, in addition to that, in that area, you do also have a price gap, which will need to be filled. I can kind of point to that here. I can kind of move in here. So, if we do break above this 468 level, I think is probably a bit more important than people might realize, because this could lead to some follow through. The top of this price gap actually comes in above the 38.2% Fibonacci retracement. So that could even lead to an upside break of this 38.2% retracement as well. So at the moment, what I'm looking at is kind of the door to unlocking the top side really does come in at 468. And if we do see a price break there, we could definitely see a gain of another $15 quite easily. Okay, so this is the current market analysis for Meta Platforms Incorporated, stock ticker META.